You want the Sydney Sweeney effect, but they've got to hit on the Kim K, speaking for your brand.
Everyone knows the brand. They know the Air Max, the Jordan legacy, the Just Do It mantra. But for investors, Nike isn't just about sneakers. This is the story of how a $35 logo turned into a Wall Street favorite.
Like, who doesn't know Nike? Just do it, baby. Like, everyone knows that I ran in Nike track shoes when I was in university, and a stock a lot of people are interested in. Founded well over 50 years ago as Blue Ribbon Sports, and everyone knows Phil Knight and Coach Bill Bowerman. That's where it started. They were powered by innovation, the big-time athlete partnerships. Obviously, MJ, the biggest one. So let's be real. If you want to look for that big swoosh, then you want to understand what the game is. And this all started out when Bowerman, believe it or not, was experimenting with a waffle iron. And the air technology changed a generation. Partly my generation, actually. 4 years after the IPO, when they got Michael Jordan to endorse a shoe, they essentially turned the entire company into a Jordan brand. So their dominance in performance created pricing power and distribution leverage, just ask Foot Locker, and their competitors had no chance and were unable to replicate. And for the last decade, the biggest shift has been moving sales away from wholesale and toward their own channels. Nike.com, that online's been big. Like you said, ask Foot Locker, the Nike app, sneakers, and owned retail. Why this mattered is it expanded their gross margins, tightened their inventory controls, and improved data feedback loops, and allowed a cleaner storytelling at their full price. There's a trade-off here, unfortunately. Some execution risk emerged. Marketing has to create demand. Supply has to stay tight. When you're listening to the earnings call and playing that earnings call, it's a very high volatile event. There's three things you got to consider here. Regional mix, China. But weakness here will definitely compress the multiple. You got to listen in for that. Their gross margins, everybody. Full price sell-through versus promos. Freight and input costs will be important. Margin beats are what give you extended rallies. If they can beat there, definitely a good sign. Forget about the headline print. You got to bear down. Look at what the guidance is going to be.
Now, Elliott Hill has a chance to start this fiscal year as CEO the right way.
This is already putting in some higher lows, and this is why it's so important. Like, you've got some momentum off the bottom, and if the guidance is strong and if they've cleared up some of the inventory issues, certainly they're poised to have a good chance here.
Elliott Hill has now been CEO for almost a year. He's run into a lot of challenges trying to turn around these brands that were legacy brands that were really well received for a very long time, and now are really struggling to find their footing.
So the future of Nike, everybody, its newest, highest profile move, they got the Nike SKIMS collaboration. The ultimate stock driver is still culture meeting performance. It just isn't MJ anymore. Get Kim K in there and get a loyal audience. It's an important thing they have to get right. It creates instant hype, a model that drives high margin wholesale prices directly to consumers via their apps.
Remember, know the drivers, watch the levels, and trade the reaction, not your guess. Subscribe for more trading primers.